IMF working on global central bank digital currency platform.
The International Monetary Fund, IMF, is developing a platform for central bank digital currencies, CBDCs. This move aims to facilitate transactions between countries, as stated by IMF Managing Director Kristalina Georgieva. She emphasized the need for interoperability between countries, pushing for a common regulatory framework that would allow for global operation of digital currencies. The concern is that the absence of a common platform could create a vacuum filled by cryptocurrencies, leading to fragmented and less efficient transactions. CBDCs, controlled by central banks, are distinct from decentralized cryptocurrencies. The director notes that 114 central banks are exploring CBDCs, with 10 already launching their own. CBDCs could promote financial inclusion and make remittances cheaper. The average cost of money transfers stands at 6.3%, amounting to $44 billion annually. Don't forget to subscribe to Guide on Finance, click the like button and comment down below for more content like this. ECB's data-driven decision-making. The European Central Bank, ECB, is likely to raise interest rates again next month, but it's too early to predict the decision for the September meeting. This will be shaped by incoming data, according to the ECB's chief economist Philip Lane. Inflation in the Eurozone has been stubbornly high, prompting the ECB to raise borrowing costs to their highest level in 22 years. Lane stressed the importance of incoming data in shaping future decisions, suggesting that another rate hike is likely in July, barring any significant changes in the data. Japan's regulator probes banks about China risks. Japan's Financial Services Agency, FSA, has queried the country's top banks about potential risks concerning China and their preparedness in case Sino-Western tensions escalate. This move is to ensure that Japan's megabanks are considering the risks and are prepared to respond if the geopolitical situation worsens, particularly concerning the issue of Taiwan's political status. A major risk for Japanese banks would be potential U.S. sanctions on China, which could hinder their business operations in the country, similar to the bans on Russian dealings following the invasion of Ukraine. As of the end of March, 3 major Japanese banks had a total credit exposure of about $64 billion to China, roughly 1% of their total assets. China to cut key lending benchmarks. China's central bank is expected to make a move to cut key lending benchmarks as the country's economy slows down. The move is aimed at preventing excessive economic slowdown, as the current ongoing global uncertainty has increased the risks of a sharper economic slowdown in China. China's authorities are trying to strike a balance between supporting economic growth and preventing the emergence of financial risks. SVB to sell banking division. SVB Financial Group announced it has reached an agreement to sell its investment banking division to a group led by the unit's CEO, Jeff Leerink, and backed by the Bopost Group. The price of the sale was not disclosed. The Federal Deposit Insurance Corporation took over Silicon Valley Bank after it collapsed in March, and First Citizens Bancshares Inc. bought its loans and deposits. The management buyout is pending approval from U.S. Bankruptcy Court and other closing conditions. Remember to subscribe to Guide on Finance. Thank you for watching.